Tuesday, February 25th. Market analysis, Stan Ehrlich. Good morning, 9:51 California time. Of course, I start out with the stock market indexes and go to futures and then some other topics periodically. We have the break that I had been talking about, past tense now, mostly happened. We've gone in just 2.5 days from testing the highs of the whole bull market trend in general, not necessarily in the YM, the Dow, or the Russell, but the S&P and the NASDAQ, yes. So, in a 2-day period, Friday last week, Monday, and today, we've gone from approximately 61 and a half, 6,150, down to 59.20 approximately. Pretty fast. And all of the indexes I monitor are now at the low of the day, hitting oversold conditions. So we are now entering the last phase, in my opinion, of the decline, and that's when you start getting oversold. We could stay oversold for several days. It is not abnormal at all. The last time we were oversold was at that low, and it was only 1 day in support. Previous to that, it was 3 days, and it included, on the last day, a bullish engulfing, which was okay and made some money. Overbought lasted only 4 days, topped out. Overbought lasted 3 days. You see what I mean? It's not just 1 day. Here's 2 or 3 days. Here's 2 days. Here's a single day for overbought, single overbought, double oversold. So sometimes these oversold or overbought conditions can last a week or even 2 or 3, or rarely even more than that. But this is the beginning of the end of this break. How much lower might we expect in the next few days? Maybe not much. We're bouncing pretty good at the moment, back to the middle of the range. And the lows today are in the ballpark neighborhood of some minor, not super good, support. So I can't really say that the bottom of the break is over, but there's some things that are happening in the last couple of hours that look like there's a chance of that. I'm not very sure yet. So I can expect potential new lows, and that would be down to 59.08, one of my support areas that I've been talking about for a long time. Another one could very well be down to this support area here, and that would be to 58.50 through 57.95 in that zone, which seems most likely. So I'm not saying we're hit a low today, although I wouldn't be surprised, but I can't come to that conclusion. I do think there's a very good chance that soon, maybe yet this week, maybe next week, we will be down to 58.50 or lower. Now, if we do have a good bounce, meaning several days or a couple, 3, whatever, off of today's lows, I don't think it's going to go very far. I don't think it's going to last very long, and I don't think it is any major bottom of any consequence whatsoever, if a low at all. So I'm basically still bearish, but again, oversold conditions imply that the market's going to turn around to some degree or another. We'll see. Now, the 1-minute charts, we had a low, a high, a little higher than an hour or two earlier, a low, but not a new low. Then we've had a higher high a second time, like the one we had on the rally at 8:57 California time this morning. So we are starting to chew our way up a little bit, but there's some very good resistance, a little bit higher, 59.80-ish. And if it turns around in that approximate price range and starts to make lower lows over a little bit, a little longer period of time, then I have no change of opinion, et cetera, et cetera. What I don't want to see, uh, because I'm not expecting it, is a new high for the day. And if it gets above yesterday's high, only in one case, and that's the YM, I'll show you in a moment, you will end up with an official green buy signal, ER signal, but nothing else is even close. So let's look at the SPY, oversold, hitting the support, good enough, missed by just a hair, and bouncing decently, but again, can't come to that total conclusion that the market is heading north for any amount of rally or any amount of time of significance. And now we're getting oversold again today on the QQQ, just a hair below previous important support levels, not super important. And I do think that soon we'll be coming down to these support levels. And that is going to be again down to about, 500. Yeah, 502. I'll use 502, 503. And maybe even down to 497, which I think should be raised a little bit, maybe like that. So 500. That looks a little better. Yes, that looks better. And again, that's not the end of this. If we get down there and we start closing below the low that was made on January 13th, we have a double top and a downside breakout with a minimum downside objective of approximately 458. Yeah, that's right. If the double top does develop and it works properly. And it seems like we're on the way down. But again, today, first day for all of the indexes that I watch, we are oversold. Next chart's the 1 minute. Yes, we've got a little rally underway, and I don't expect a lot for very long at this point. Now, we're oversold again on the NASDAQ futures, generally around where some important previous lows were. So again, there's some chance of a little bit better bounce than we've got right now, but I doubt this is a low of major significance. I don't think we're going to rally into new historic high grounds or make new highs for months and months. I do think it's going to rally a little bit more, maybe, and I'm not very sure about that, but I do expect very soon new lows. And the next support level for the NASDAQ should be around 20,730, 730, 20,730-ish. I'll probably put a line in here, a little zone for tomorrow, but right now I'm going to leave it alone. So I can't be too much more bearish at the moment because of the oversold condition. Next, we got NASDAQ futures, 1 minute, and a nice little bounce, but again, maybe a little more and then down. Okay, the YM, we do have a possible double top. It's not a very good looking one. It's not very close to each other. These highs are modestly not the same numbers, but very close. Plus the fact that we did get a sell signal on the top of the market on the YM to the exact high day. So here we are, oversold for 3 days now. Today's low is a little lower than the last 2 days, but hardly. And then we're higher on the day at the moment, and decently so, while the S&P is down 2.5 or 24, and the spider is also down, 2.5 points ish, and the Q is down, the Nasdaq's down, but the YM a little bit higher. Not only that, but if the YM were about to make new highs for this morning's session, it's going to make new highs higher than yesterday's high, and it's yellow, therefore it will turn green as soon as the first tick above yesterday's high occurs, if it can, and that would be an official buy signal as long as it closes higher than yesterday's close. But we haven't made that higher high than yesterday's high yet. But this is the one that's going to do it first, probably, if anything does it. And the rally's pretty darn good, coming up much better than the rest, relatively speaking. So The YM is leading the way up at the moment. We'll see if it can have a reversal. Then the other ones do have some better chances of rallying a little bit more. What about the Russell? Russell 2000 has made a new low for a long period of time, ever since September 12th. That's October, November, December, January, and February. That's 5 months and a week or so that we have not been as low as today's lows. And it is in a major support area, and it is oversold now for the third day. And it's not that much lower on the day at the moment. So it could close higher. And if it does the same thing I talked about a moment ago on the YM, get higher than yesterday's high, we'll have a bullish engulfing green. But it's farther away. I don't think it's going to happen. And then we got the 1 minute chart on the Russell. Okay, bonds have finally reached my minimum upside objective on the head and shoulder bottom formation that I have been showing you guys ever since the probably, the last shoulder low around January 24, 25, probably 23 maybe. I started talking about a shoulder low. It did it. It broke out. It went sideways, bouncing off the neckline for about a week, which is a little longer than I would have guessed. It got up sharply, but it had us bearish engulfing without reaching my minimum upside objective, which again was 17 and a half, 117 and a half. And then it had a correction back to the neckline within a very short 3.5 days or so. From that point, February 12th, we have been working our way, except for a little dip, higher. And today, finally, pattern is fulfilled. Head and shoulder bottom worked relatively classically. And that's the end of the pattern. It did what it was supposed to do. End of story. Now what? Well, we're overbought. No surprise. And we bumped against the resistance area. I think we're close to a minor downside correction again. But now it is important that we see, in general, higher lows over, say, week to week to week, or every 2 weeks, something like that, relatively short term, and higher highs over the same time periods, every few days, every week, every 2 weeks, in order to perpetuate a move up. Now remember, this is the possibility of a very broad 1.5 double bottom formation. The first low was a bullish engulfing ER buy signal on October 23 of 23. And I am so tickled pink to tell you that the second low was also an ER official buy signal green on January 14th of 25. Both major bottoms, I've got buy signals. Both, one of them worked past tense big time. This one is doing great so far. New high again today, bumping against my first decent resistance area, but overbought. Very possible it's about to have a minor dip down, maybe into, let's say, down to 115, maybe a little under 115, but not much. Lasting a few days, a week, and then new highs. But it hasn't started to go down at all yet. It's still up there right up against that resistance. And I like what I see. I'm still bullish. But now is the time to start looking for sell signals. We haven't got it yet. And now is the time to start thinking about tightening up your protective sell stops if you've got long positions, that kind of thing. 10-year notes, almost exactly the same. Next, crude, new low, not quite oversold, and not particularly at a significant support area. Nope, too generalized. But we have an outside trading range, an outside down day, or a bearish engulfing. Normally, bearish engulfings are bearish and they make the market go down more right away. But this one is happening close to oversold conditions. It might even get oversold today if it drops off more. It's right near the low of the day already. And if it does get oversold, then I would start calling it a possible Bass-Ackwards reversal Remember, that's when you have a bearish engulfing and oversold conditions. But I also like to see them in support areas and other reasons for it to turn back up, which I don't have. All I got is an outside down day, which is normally just bearish. So I'm still looking for lower levels, but I'm beginning to be a little cautious about how much more down. Next, heating oil. Exactly the same thing. Close, well, not as close, but getting a little oversold, but we're at support. So I am expecting lower lows, diving into the support area, and probably getting below 2.3 without much problem. And we'll see if the support level holds and if we start to get oversold. Still bearish for the moment, but mildly so. Not a real big bearish deal here, in my opinion. Next, Doji inside sideways trading range at the moment, just up a little bit on the day. There is that gap to close. I mentioned it yesterday when it happened. So we could come back up to the low of Friday, close the gap, and then turn down. That's the best I can come up with on natural gas at this point. Next, I do think that the gold bearish engulfing sell signal on February 14th has shown us that it's part of a topping out process, but it wasn't, unfortunately, the highest high like we frequently see. So I am trying to justify staying expectantly bearish. It's not starting to really break out to the downside yet, but we came awfully close at today's low, making it below the low of the signal day, the red bar on February 14th. No bearish engulfing today, just a failure to make a new high. So it's getting some resistance here. Looks like we're going to have a little more of a correction. Now, the pennant formation, which developed from October 31st to about January 16, shows us the likelihood of a move up to 3007 and maybe up to 3015. Yeah, 3115. Sorry, 3115. But a little problem is existing. Having been overbought a few days ago, minor downside correction is expected first before we see new highs. And with silver, it's starting to do that already and fairly convincingly. So silver, I think, is going to dip down to about 30.15. Yeah, that's my expectation. It did get overbought. It did get up to the top of resistance area, and it just simply turned around. No surprise. I talked about it doing exactly that in the last few days. Next, same story on platinum. Resistance, overbought, did turn down past tense. Now almost oversold and almost in a support area. So it is coming very close, I think, to a turn back up again. Copper got overbought, got overbought, and did have a bearish engulfing ER official sell signal on the high day of the move, very similar to what happened exactly in September 30th of 24. Unfortunately, we never got a signal around the end of May last year, but it was overbought and at a resistance line at the same time. Yep. And that resistance line should have been moved when we got a different contract month, and that's it. It came extremely close. And yes, you could call it a double top, but that's so damn big that the downside objective is really unrealistic. Now, I'd like to tell you that these futures markets can't go negative, but it actually did happen. I think it was just a few years ago in crude oil. Literally went below zero for just a few days. Okay, so they have, and maybe that extreme, I don't remember any other contract going negative in my career of 53 years. That's it, one time, as far as I can recall. Okay, copper again, looking for a little bit more of a dip, not oversold. expecting to see a little more weakness. That sell signal has been a really great one so far. Next, soybeans, soybean oil, soybean meal. Now, I do think, and I do have evidence that the grain markets, corn, wheat, beans, oil, meal, are in the process of bottoming out. That, of course, is past tense for, in particular, corn. But beans have a possible double bottom, and they need to make a new high above the last month or two's highs in order to break out of the double bottom and then have a move up to 1187. So far, you just got a possible double bottom, resistance very accurately within 2 cents, stopped the rally on this last rally. And now we have a minor new low today, but it's trying to turn. It's only down a penny. It's been a little higher for the day lately, just a little while ago. I'm looking for a turn up. I don't expect much more weakness. I don't really think we're going to get oversold this time. Next, soybean oil. Neutral RSI, dipping down a little bit, just got out of overbought condition in resistance, and I basically like what I see. Now, the bigger formation is a large head and shoulder bottom. It's a little lopsided. The last shoulder is a little later than you would expect. The neckline's okay, upward slanted slightly. And if it can maintain strength, especially getting much stronger, much quicker, then we've got an upside breakout at approximately 51. I should move this over to here now. Yeah, that's right. Then our objective is going to be almost 62. Good. But I've got to see it start to turn up. Right now it's down a little, not hurting the big picture. I just don't want it to go and stay below 44 and a half. That could cause some problems. Next, we do have a minor new low in soybean meal. It's currently the laggard along with soybeans and doesn't want to behave properly so far. I don't like this, except look where we are. We're higher on the day, up $1.80. It made a new low for a couple of months and turned around. Now, if we get above, say, 30660, in particular 30880, this could be a last low of some significance. I think it's trying to turn up. I hope beans and oil are doing the same thing. Corn. We did get the minimum upside objective fulfilled on the head and shoulder bottom. That's gone, past tense. Like bonds today, it moved up some more. And now almost overbought, not quite. Turned around a couple of days ago, and we're dipping back. I'm basically bullish, but I could expect to see a mild increase of this dip and maybe down to about 477, 473 would not surprise me. I could even allow a little bit more of a dip, but not much. And I'm now basically looking for buy signals. We're getting close to oversold. So waiting for a buy signal, basically, or reasons to get long again. Wheat, kind of the exact same story. Got overbought, turned around, a little bit of a dip, nothing terrible, waiting for buy signals. And we've got cattle. Little rally, had a sell signal near the top. I think it's going to rally a little bit more. This test was actually back down to the beginning of some support. I didn't have it marked off quite at that level. I had a little bit lower. But I wouldn't be surprised to see cattle building a little bit more sideways trading range and then starting to go up some more. The intermediate to longer term trend is up. Okay, Miss Piggy. And the longer term trend is up. We've seen higher highs ever since the summer of 23. Even with a new low for many months, it didn't hold and it bounced right out of that low. Right now, we're coming back down to support. And we are very, very, very close to oversold at 26.26. So a little tiny bit lower is going to get you oversold in a support area around previous lows also. I think we're about to turn back up. And there is a very small gap up here to complete to close where we haven't had a rally to do that at all so far. And there we have a little marker for that gap. And then we've got the stock that I was following closely. This very much looks like it's about to turn back up again. I wouldn't go short. If you were, good for you. I didn't expect this big break, so I wasn't. And it took me by surprise. Luckily, I wasn't long. And I'd be looking for buy signals, pretty much in the price range that we're coming down into right now. Maybe even a little lower. But the fact that we're down in single digits is fairly rare for a daily data chart. The last time we got down to single RSI numbers, we were in the bottoming out time frame of a couple of weeks, and it produced a heck of a bull move from 40 all the way up to almost 80 on that first big leg up. Well, I think we're actually coming close to something like that happening again, to be honest with you. All right, let's look at the E-mini again real quick to see what's happening. I think it's actually starting to work its way back up a little bit more. Well, a few minutes ago, we made a higher high back to resistance. But okay, now we got super overbought on a 1 minute in the 90s. And that's the kind of thing in resistance also that I look for to stop rallies and start to go down toward the low of the day. Yep, same thing going for the SPY. Same thing, not quite as pronounced for the QQQ. NASDAQ, just about the same. Touched a little tiny resistance line pretty accurately. Okay, we might have just started another leg down to get close to the lows or make a new low today in stock market indexes. You guys have a great day and profitable trading to you.